Welcome back to Options Action. The fate of Microsoft's $68.7 billion deal to acquire Activision Blizzard is hanging in limbo. The major merger now in the hands of the FTC, which lodged a formal antitrust complaint last week. But regulatory churn doesn't mean your profits have to wait. Here to deliver today's call sheet is Kelly Intelligence CEO Kevin Kelly. So, Kevin, how are you playing this one into the new year?
Well, Mela Kaliki Maka, Melissa, if you like a stock like Microsoft does with Activision, it's got to be based off the fundamentals. And we saw the most recent earnings from Activision was a beat. And Activision even said that their most recent Call of Duty is the fastest selling of that franchise. And if we go back 15 years, if you remember when Jim transferred to the Stanford office in the show The Office, right, they were playing Call of Duty then. So it's a great franchise that's going to build and also come out with another edition next year. You also have net cash on the balance sheet to the tune of about $9, which is expected to grow to about $13 next year. And also think about this. There's a catalyst in front of us of Microsoft potentially purchasing this stock for about $95 a share. And they can do that because there's a weak FTC merger complaint where the FTC is basically saying, hey, wait, we don't think this merger should go through because Sony, which owns 70% of the hardware market, could be hurt by Microsoft Xbox having exclusivity to the Call of Duty franchise. Well, Microsoft shot back and said, listen, Sony has about 286 titles that are exclusive to them. Xbox only has 59. By making it 60, how is that going to hurt Sony? As well as, will let Sony have the Call of Duty franchise? So you also have that upside catalyst there. And then we have a strong product pipeline where Diablo 4 is going to come out next year. So the stock has a lot of catalysts behind it. It's fundamentally sound. And so we think there's a great opportunity here to do a covered call strategy where investors can go out and purchase the stock today at a significant discount to the Microsoft offer, but also to the operating fundamentals where it's worth about $80 to $100 a share. So you can go out, buy the stock today, and then also sell the January 27 call for about $2.40, and your all-in will be about $73.75. So you can actually collect a bunch of options premium while it plays out in the courts with the FTC and the merger, which is expected to close middle of next year.
Quick question, Kevin. The thing that you said to me at the beginning was Merry Christmas in Hawaiian?
Yes. It's the wise way to say Merry Christmas to you.
Are you in Hawaii or are you Hawaiian?
A warm place. I'm in Denver, but it's sunny out today, really sunny in Denver, and this trade is very sunny, so it all kind of packages into one.
Okay. There's a first for everything, including Merry Christmas in Hawaiian on Options Action. Carter, your thoughts on all of this?
Sure. First of all, there's nothing better than selling covered calls, of course, but the street is all over the place. Their targets at 95. Their targets at 82, big sell-side firms. So there's a big debate. But there is a chart, and I think, as is so often the case, it's almost all technical. And here's the thing. I didn't manipulate those lines. I didn't make them fit. They literally are touching like magnets. We have a stock that continues to respond as it ascends to the uptrend line, and since its peak in 2021, continues to respond on the way down. We are into the decision moment. I think it actually breaks out to the upside.
Mike?
Yeah, so, when you're using a covered call strategy, one of the things I typically like to see is that the implied volatility of the option you're selling is well above what is realized recently. And that, of course, is the case here. But there's a reason for that. And that's one of the things that Kevin was alluding to. This is a deal name. And the thing is that if we get some transparency on the outcome of that deal, whether or not it's going to be shut down or it's going to happen, it could move very sharply to the upside or potentially sharply to the downside. And that is one of the situations where I might favor actually owning at the money calls and selling something closer to the deal price, which is $95.
Kevin Kelly, aloha out there. Up next, we've got tweets and the final call.